All right, so in this video, I'm going to be going over what makes an order block high probability. So what's everything you need to see for it to be considered a high probability order block, because you can't just hit an order block. Isn't just a down closed candle or an up closed candle, the last up closed candle or the last down closed candle. There's definitely more to it than that. So in this video, I'm going to be going over everything that makes it high probability, and I'm going to give you a few examples. Okay, so I'm going to start with Euro GBP. So here's the order block. Here's one order block that I was on. All right. So boom, there's your order block on the 1 hour chart. Okay. So what makes this a high probability order block? Well, first off, the overall trend for this is bullish. Okay. So we're trading with the overall trend. That's number one. Okay. My narrative is bullish. Okay. I'm not fighting the trend. We're trading with it, with the overall institutional order flow. Institutional order flow is bullish. Another thing, notice how this took liquidity. I didn't mark this up because it's so wicky. I took this one because it is the last bearish candle, but I like how there's not a lot of wick to this. See how bulky it is. There isn't a lot of, it's all right there. It's not wicky. That's pretty much what I'm getting at. But the narrative is bullish. We snatched liquidity and we left a fair value gap. That's really important as well. So for a high probability order block, it needs to leave that fair value gap. Where's that fair value gap? 1, see that candle? 2, 3. And also, here's the next point. When did it happen? When did this occur? This pullback right here, or the actual order block was formed during London session. So when is a kill zone? 2 to 5 a.m. 2 to 5 a.m. is that kill zone. It was formed during a kill zone. And then we had this big push up that created a fair value gap again during a kill zone, and it pulled back into it. So for your entry wants to be during a kill zone as well, and that is New York, which is 7 to 10 a.m. Eastern time. So I gave you several different things there if you were paying attention. Your larger time frame, your narrative, the institutional order flow needs to be in the direction that the order block is. So institutional order flow is bullish. So we want to make sure that the bullish order block that we're using we want to make sure we're trading in the direction of the larger time frame is what I'm getting at here. Okay. It needs to take liquidity. Okay. You want to see it leave a fair value gap, shift in structure, time of day during a kill zone. And yep, that is your high probability order block. Now, here's another thing I want to clear up because I don't believe I went over it in my first order block video. Does an order block need to be one candle only? No, an order block can be more than one candle. So I want to make that very clear. It can be more than one candle. So for example, this is a 30-minute chart that I'm on now, but this right here, which is basically, it's the same area, but I have this last candle in here as well. It's still a little bit wicky, but it's a little bit cleaner than the 1 hour. But this is all one order block. Here, let me drag it a little. Oops. See right here. 1, 2, 3. That makes one order block. See, it's not one candle, but it's still an order block. Okay, it's still at a key time period. Again, this happened during London session. Then you had this really strong move higher. This isn't some choppy price movement right here. This isn't some choppy price movement. It isn't just dilly-dallying around. This is a really strong move higher that caused a shift in structure right here. Okay. And what did it leave? It left a fair value gap. That's what you want to see. As you want to see a fair value gap in there created on that shift in structure. See it take liquidity. Again, overall, we're trading with a larger time frame. We're trading in the direction of the larger time frame order flow. And that right there, that break above that swing high, that is our change in state of delivery. That's the change in the state of delivery. It's now offering what? It's now going to look to attack this buy side, to attack this buy side, to attack this buy side. And that's exactly what it did. Okay. That was that switch. That was the switch. As soon as it broke that structure, left that fair value gap, there's your high probability order block. Okay, so now we're looking at a chart of AUD NCD, a 15-minute chart. This is one I hit the other day. This right here is your high probability order block. This is your high probability order block. So again, what makes it high probability? Well, the narrative is bullish. Okay, institutional flow is bullish. So I'm trading in the direction of the trend as well. Okay, that's number one. That larger time frame is in my favor. Number two, did this take liquidity? See that swing low right there? It did take liquidity. It took out those sell stops. Remember, there's sell stops resting underneath these swing low levels. So it took out those sell stops during the end of London session. It snatched those sell stops. So again, remember, during a key time period, well, it's outside of the London kill zone, but it's just about to come into New York, which is New York kill zone starts at 7 a.m. So what happens? Snatch those sell stops, and then you get this huge move higher. Look at that. Look at that huge move higher. What does this represent? That's a change in the state of delivery. So we had a shift in structure. It broke this swing high, purged those buy stops above this level. That is your short-term shift in structure right there. Okay, short-term shift in structure during when? Well, we're coming into New York now at this point, and it left our fair value gap, which is very important for your high probability order blocks. You want to see a fair value gap in there with your order block. We have it right there. For anyone that's unsure what a fair value gap is, I will link the videos to those in the video description. But 1, 2, 3 imbalance trades into that imbalance and actually completely fills it in. Really nice retracement within that order block, which is right here. And yep, you can see after we had that shift in structure, price is now going to want to do what? It's going to want to attack the buy side. Okay, where's buy side resting? It's resting above these swing high levels. Boom right here, boom right here, imbalance up here, and then you get the rest. And that's the result. Okay. All right. So here's another example from one of my most recent plays. So right here, look at my cursor. That's all one order block right there. See that? I just didn't include this last one because of how wiki it is. These have a lot more body to them, so I want to use these. But this is all one order block. Okay. Remember everything I've told you so far. Did I say the date on this? Well, it's July 6, 2022. Okay. And it's CAD JPY. Now, my bias on this, my weekly, my daily bias is bullish. So my narrative is bullish. I'm trading with the overall trend. Okay, that's number one. Now, also the time that this occurred, we see, boom, we got this really large move up during London. So originally we had what? This move lower, aka our Judas swing, our fake run lower. That did what? That took sell stops. So it took liquidity. That was another one, if you remember from earlier. We took liquidity during London. What happened after we took liquidity? What did price do? Huge rip higher, and created your fair value gap. 1, 2, 3. Fair value gap, shift in structure. There's your change in the state of delivery. Now what do we want to see? Well, we took out this swing high right here, filled in this fair value gap. We're in a short-term premium, so obviously we don't want to be buying up here. We want to wait for a retracement down into our order block, down into our fair value gap, back down into a short-term discount. So this is our order block, which you could look at it on a few different time frames, but I'm using this 30-minute just for an example because I want to make clear that it is not just one candle, and I don't think I went over that in my first video. An order block can be more than one candle, which we have right here. So it trades down into it during your London kill zone, but also it gave you a chance during, because it kind of chopped around a bit, so it gave you a chance to get in during New York as well. And then what happened? Price is going to want to do what now? It had that shift in structure, okay, aka change in the state of delivery. It's going to want to attack that buy side, and it does it. Okay, you got buy side right here. You got your imbalance up here, which is going to be drawn to come up and fill. And yep, that was the result. So hopefully you found this video useful. I'm gonna, one more time before I hop off here, one more time, what do you need for that high probability order block? You need to be trading in the direction of the institutional order flow on your weekly, daily chart. So you want to be trading in the direction with that larger time frame. Okay, it needs to be during a key time, so you want it during a London or a New York kill zone. Okay, takes liquidity, leaves that fair value gap, and yep, I think that's about it. Obviously discount, you want it in a discount, obviously. Yep, I think that's everything. So if you found this video useful, make sure you leave a like, make sure you subscribe to the channel, turn on notifications so you don't miss an upload. And yep, I'll see you later.